All right. Hello, everyone. Welcome to episode number 68 of Going Live with Good Soil. I think the last 2 weeks we've been, fortunate to have some crazy live news each of the last 2 weeks. I think 2 weeks ago we had the live news of what was it? Elon accepting the Twitter deal like 10 minutes before we went live, I think. And then last week we had during our stream, like 10 minutes in or something, or 20 minutes in, we had the live news of Elon denying on Twitter that he spoke to Putin. Because for a hot minute there was uh, it was being reported, according to controversial Ian Bremmer, who we said was controversial and may or may not be trusted, that Elon spoke to Putin, and then Elon denied it. So we were able to, maybe there'll be some exciting live news this time. We're lucky, three times the charm, right? So let's see. I guess. How's it going, Matt?
Pretty good, thanks. Yeah. How are you?
Good, good. Um,
It was kind of
so
funny though seeing Elon tweet, like the Three Musketeers thing with him and Trump and Kanye, and I'm just like, what bizarro world is it where those three people are like,
in
more
control
or
of
less
social
joining
media now.
forces?
Yeah,
They're all kind of pushing back against mainstream media in some way or another, but it's just like it's like you like 5 years ago you would not really see those three coming together there in any sort of like meaningful way. Not that they're really working together, but it's just kind of strange.
it is strange. Well, Elon and Kanye are like good friends, apparently, right? So, yeah, but yeah, Trump on is the Truth Social even still happening? I don't even know. I feel like that's sort of
I
fizzling
don't
out,
know.
but maybe it's still around. I'm not sure. It feels maybe sort of like what was that other audio thing before Spaces that everyone was
Call
Clubhouse.
in or Clubhouse.
Clubhouse.
Yeah, there's Clubhouse
Yeah.
and Call. Yeah,
Yeah.
Clubhouse was so ridiculous. It was like really cool for like a month maybe, and then it was just
Yeah.
gone.
Yeah.
It
Yeah.
was really interesting.
Well, Twitter Spaces just invalid, totally, I think, made it obsolete. I mean, Twitter Spaces, the technology is not as good as
Mhm.
Clubhouse was at the offset, I think, but it was serviceable enough where it disintermediated Twitter Spaces because Twitter Spaces didn't have the social network and it was trying to build that quick before Twitter Spaces came out. Once Twitter Spaces was functional, then there's no reason for people to try to build a new social network on Clubhouse and start over, I
Yeah,
feel like.
that is one of the huge benefits. I mean, now that I'm using Twitter Spaces a little bit more, it's kind of nice to see. Oh, Emmett's in a room or Bradford's in a room, and you can kind of like drop in and see what other people are listening to. And it's a good way
Yeah.
to, I think, build some community in a way that you probably can't if you have to go to a separate app altogether. So yeah, it's
Yeah.
interesting.
Interesting. All right. Well, let's move on to we'll move on to our typical outline here, which is we talk a little bit about macro market stuff, and then we go into all the Tesla and Elon Twitter news stuff, and then we touch on maybe Lemonade or Roblox or Rocket Lab, and then Q&A from the audience. We'll keep it to about an hour today. Tomorrow is a big day, so we'll spend a lot of time kind of talking about that. But first, on the macro news, September CPI came out last week. The market really got frazzled from it, tanked fast, worse than expected, came in hot. What are your thoughts, Matt? What do you think about this September CPI?
Yeah, it was. I
Month
mean, it
over
was
month,
certainly.
right? It was like 0.4% or something, right? Month
Yeah, it
over
was
month.
like 0.4%, I think, month over month. Market had been expecting about half of that. So it's the market really hated that. I mean, it just absolutely puked in pre-market when those numbers came, and then we had this kind of bizarre rally throughout the day on Thursday. So I mean, just the volatility that we've seen over the last 4 trading days or so has just been absolutely wild. I mean, yesterday we saw stocks rally. Tesla was up 7% or something like that.
Yeah,
It was up 4% pre-market, and then it went negative, and now it's back up a bit. So I mean, the markets are very clearly just frazzled right now. In terms of CPI, I mean, I think the big news that kind of came out of that, or at least the change in sentiment, was all right. Market had been pretty sure that there was going to be a 75 basis point hike, maybe a small possibility of a 50 basis point hike, and now you're seeing the futures markets price in. I think it was like a 12% probability of a 100 basis point increase in the November FOMC meeting.
hmm
Um, that may have moved around since last I checked, but I mean that's just pretty wild. Wild if we could get another full 1% increase in the federal funds rate. I'm not saying that will happen. It's still very unlikely given the kind of implied probabilities. But I think a lot of people were expecting a slowdown in inflation and, for the Fed to maybe start having a little bit more dovish language, and that just hasn't happened yet. So,
Yeah.
I think it's kind of kicking the can down the road of when the Fed might pivot, because right now it's looking highly improbable that they'll pivot anytime soon.
Yeah, and I see on the Cleveland Fed forecasting, it's showing that they're predicting October CPI at this right now is going to be month over month is going to be 0.8%. That's what they're predicting. That's pretty high. That's
Wow.
pretty high. Yeah, I'm not sure. I don't know. I mean, I don't know where they get their predictions from, but it was just updated today. So yeah, it's I don't know what's up with that. Is it the owner's equivalent rent that's really messing things up? I don't know. I mean, it seems like gas prices, commodities, a lot of things have come down and bounced back down, but somehow these CPI metrics are still showing significant inflation month over month somehow.
Yeah, I mean that owner equivalent rent thing is it's such a horrible metric. I mean, it does have the benefit of like smoothing out increases over time, which is kind of a good thing in normal times. But when you're essentially smoothing out increases that happened 12 months ago and they're just hitting now, that's actually really not helpful information when the inflation rate is so high and you're trying to get a good gauge on what like the true month over month inflation is. So I
Yeah,
don't know, the higher these kind of month over month figures get right now, the more inclined I am to kind of think that um, we're going to see a more serious, like slowdown or reversal, maybe spring or summer of next year. So
yeah, yeah. It
to me,
could
it seems like
be.
those probabilities are increasing.
Yeah, it feels a little bit like real inflation for about a year there was like 15 to 20% in reality, but the CPI metrics, because they're so delayed and how they do it, only got it up to like 8 or 9% at the highest. And that still seemed like shockingly high. But
Hmm.
because there's so many delayed factors, like the owner's equivalent rent, this is now 8 or 9% is like being sustained in the CPI print for an extra year, but it still gets us to the actual inflation that was 15 or 20% for like that 1 year. But now it's like in actuality, it's like zero right now. But the CPI measures are so delayed and half of how it measures it or something, you know?
Yeah, which would be kind of wild, because I mean, if it is roughly zero right now, if you were to kind of take out all the time delay impact of everything, then with the Fed raising rates and kind of crashing the economy in the way that they are, then I mean that would almost certainly imply deflation next year, just as
Yeah.
like the supply side gets absolutely, or the demand side gets whacked. So
Yeah.
yeah, I don't know. It'll be interesting. I mean, I was even looking today on a couple people. I think Whole Mars posted something about you could get like a used Model 3 with FSD for $35,000. I was like, wow, that's like it does seem like deflation is starting to show up even
Yeah.
in like the Tesla used prices. And that was, I
Yeah.
think, one of the leading deflationary month over month figures was the used car prices have really taken a hit. So that is something worth keeping in mind for Tesla, and I do think we're going to see some price decreases at some point here.
Yeah. And one more note about the macro thing that kind of drives me nuts is I think it was Bostic, the the Fed person, Bostic, the banker from Atlanta, Bostic, I think is his name. Apparently, there's investigation now on him buying and selling stocks in his personal portfolio. I mean, he can hide behind the wall that he personally didn't press the button to buy or sell the stocks, but I'm sure he told his manager, his investment manager, like, "Hey, sell all my stocks now." Like at the height, right before they started cutting rates aggressively. If you look at the chart,
Yeah,
Baru posted a chart of where exactly his selling of all his stocks happened. It was like at the top, and it's like, of course he apologizes for it right away and he's trying to sweep it under the rug quickly and move on, but it just seems so shifty that the Fed committee, they can do that stuff, like, and I want to know when he's buying back. That's what I want to know. When is he buying? When is he telling his manager to buy stocks again? That's what I want to know, because that's when we should
yeah.
buy again more. I don't know, it just seems so it's like worse than Nancy Pelosi when it's the Fed doing it, you know?
Yeah, I mean, they're both so disgusting. Honestly, it's like,
Yeah.
on the one hand, you've got confidential information, and you can like determine when things go on the floor, but like with the Fed, you're directly influencing like policy, which has a direct impact on stock prices, kind of across the board.
Yeah.
So yeah, I don't know. It seems like there's all these restrictions on corporate insiders trading, and like right now we're inside the trading window for Tesla, so Elon can't sell right now.
Yeah.
And it's like there's way more strict rules for corporate insiders than there are for people who have way more power on
Yeah.
impacting the overall stock market. So
Crazy.
it's yeah, I don't know.
Drives me nuts.
It's
I mean,
just
how do those guys?
frustrating.
How do Congress? How do Congress people and the people on the Fed, especially the Federal Reserve, they should not have the ability to own stocks, or even like I don't know, it should all go into like a blind trust or something. Like there should not be any discretion. They should not have any discretion whatsoever. They shouldn't even have investment manager because you're one step removed if you have an RIA, independent RIA managing one, but you can tell that independent RIA, like, hey, get me out of all my stocks. And they'll have to follow your request, so like you still have that, but it's kind of shady, it's not like him
Yeah.
pressing a button in a personal brokerage account, but of course he's telling his
I,
RIA what he wants to do or not.
if you're going to be a public servant, and that's like the generous term for any sort of politician or like, federal official, why don't you just invest in a passive, ETF or something like that? To me, it seems like, index-based
Yeah.
investing for the time that you're serving is
Yeah.
like a prudent thing to do.
Yes.
But how do
Just
you get
dollar cost
Congress?
average all the way along the whole
Yeah.
time. Yeah.
Which is a
Yeah.
great strategy anyways. I mean, that's
Yeah.
like proven to be one of the best strategies. So
Yeah.
it's just so sad that
Yeah.
like they just don't do that. But
Yeah. All right.
anyway,
We'll move on. Yeah. Let's move on to Tesla. Big day tomorrow. Earnings tomorrow. I see people tabulating, all the estimates, and the estimate we have is it was $1.20. What was
I
it? A
think we're
dollar
$1.32 if
dollar
I'm not
32.
mistaken.
Yeah, $1.32. So it's sort of at the high end of what a lot of people on these charts are showing of all the Tesla Twitterverse people, though, right?
Yeah, so it's kind of interesting. When we were going through this last week, we said, we're kind of sticking our neck out here because I think at that time most people were like around the $1.10 sort of range.
Hmm.
Um, but a lot of Tesla Twitter analysts have come out in the last week or so with estimates in like the $1.20 to $1.30 range, somewhere like that. So we're still on the high end, but not nearly so much as it seemed like we were last week. But it's
Hmm.
kind of interesting because historically we try to be like, what's like if we think of Tesla's earnings as like a probability, like a bell curve, and like
Hmm.
what's the where do we think they're going to end up? We always try to go for like the middle. We don't try to be conservative and have them be. We don't try to be aggressive and just say, oh, we think the Tesla's going to go to the moon after this earnings report. We really try to get right in
Yeah.
the middle. And when we're going through all of our assumptions, we think the $1.32 is right in the middle. Just so happens
Yeah.
that puts us on the high end this time, which is really unusual because we tend to be, I would say, more towards the middle of the Tesla Twitter analyst
Yeah.
distribution. Yeah. So it'll be interesting to see. We did change the
Yeah.
methodology a little bit this year to kind of get a little bit more, or this quarter, to get a little bit more granularity on the cost of goods sold buildup, like we walked through last week.
For the regions
So
and stuff. Yeah.
for the regions, yeah. So I think that's an improvement in the overall methodology, but it could be that we've got something off there.
Yeah, yeah. I think our focus on China, being much more efficient has led us to this higher number than everyone else, which, I think at some point you got to break it up by factory and say, okay,
Yeah.
we all know Fremont is the least you have to, everyone should know that Fremont is destined to be the least profitable factory. And then you have Giga Shanghai, which is probably, we think it's arguable, but we kind of think destined to stay the most cost effective because Chinese efficiency, labor, hard work ethic, and all that. And it's still far advanced and they can continuously, but you can make the argument that Giga Berlin or Giga Austin will be more cost effective because of newer manufacturing technologies. But I'm not sure that is big enough. And I think that it's marginal. I think China Giga Shanghai has among the best manufacturing technology within it too. So, they have some giga presses there, don't they, at Shanghai now, and they're running those and stuff.
Yeah, I
So
think they
it's
do. Yeah.
yeah.
So
So
we've got that
yeah.
and higher throughput. And so as we were looking through it, the kind of Q1 cost of goods sold compared to Q3 was really more important. So it's, you're trying to estimate, okay, how much does the kind of improved throughput in the factory, so like the improved output Q3 over Q1, how much does that lower your cost of goods sold? compared to the inflation that we've seen this year, how much does that increase? And
Mhm.
trying to estimate what that is on top of the the Berlin and Austin ramps is pretty tricky. But we went through, and like I said, we're not trying to be conservative or aggressive, so we wouldn't really change anything. Just because it looks like we're on the high end right now. We like our numbers. We think they're about right. So if we're wrong, we'll
Yeah.
adjust. But we're comfortable kind of keeping them where they are right now.
Yeah. And last quarter, there was that big variable, the Bitcoin impairment that no one saw coming, or that they sold a bunch of Bitcoin. No one saw that coming. Um, and then this quarter, you don't have, and I don't think most people are putting in the potential of the major deferred revenue credit, right? Or I mean, there's always potential every quarter going forward that they're going to take a huge chunk of. I think we touched base earlier. You said it was like a billion and a half of deferred revenue, and they could take a big chunk of that, which could be up to a maximum of 50 cents per share around that if they suddenly did it this quarter. But there's this potential. One of these quarters, there's going to be a chunk of that recognized, right?
Yeah, and so I think it's closer to like 3 billion in overall deferred revenue, but for the
Hmm.
deferred revenue that's actually related to full self driving, I think that's about 1.5 billion. So yeah, they're going to recognize that at some point. I had initially been thinking they'd recognize it in Q3, but it looks like the rollout didn't quite go as wide as maybe we might have thought. So
Yeah.
in Q4, like if all of North America, anyone who has FSD gets beta, then I would say yeah, it's going to make sense for them to recognize all of that deferred revenue for those customers at that point. So that's going to happen at some point, but I think analysts are going to back that out, probably
Hmm.
rightly so, because you've got essentially like the last 3 years worth of FSD sales, even longer
Yeah.
than before that, kind of just piling up on the balance sheet, and it's just going to hit at one point. And so analysts will back that out. It'll be like this huge gap earnings thing, but analysts will back it out. But then the thing that I think a lot of people don't think about going forward is that future FSD sales are going to be fully recognizable, at least in those geographies where it is fully recognizable. So there
Yeah.
is an ongoing margin improvement going forward. And I don't think most analysts are actually modeling that out in the detail that they should be.
So that's probably one of the biggest unknowns, hardest to model when it's going to happen, when it's going to hit, and the actual headline number, even though it'll be backed out, But the other, I would say, would you say the second hardest unknown to predict by anyone is what we call the phantom asset of the regulatory credits buildup they have that they realize this quarter? And is that probably the second hardest thing to predict?
So
Would you say?
that is, I mean, I would say 2 years ago, it was a much bigger, it was certainly like a bigger in terms of like the percentage of revenue or and especially the percentage of margin that it contributed towards. It was much more impactful. So
Hmm.
as Tesla's automotive revenues have really grown, the regulatory credits have stayed roughly flat. So that kind of tells us that they're getting lower pricing on it or just selling fewer. Um, so it's becoming less important, and a lot of analysts kind of back it out anyways because they don't think it's going to stick around in the long term. But yeah,
Hmm.
it's like really hard to forecast. So I think we're modeling 350 million this quarter, but like they could just come in at 700 million or something like
Yeah.
that, and you've
Yeah.
got no way of really knowing how they're going to do it.
Yeah. So maybe we should
Um,
like do a post. We can do like a post analysis of saying like, let's back out the regulatory credits and back out the deferred revenue if they end up doing that and see how close we were. That's probably the best way to figure out how accurate our model is. I would say, right? Because those other things, no one can predict those other two things. Really, it's a roll of the dice. Really.
For the most part, yeah. I mean, you've got to guess something.
Yeah.
And the other thing to keep in mind too is I think James Stevenson. I don't know if he's looking at Q3 or Q4, but there's this deferred tax asset as well, which could be like $1 billion or even more that gets recognized. That one will definitely be a back out. So
Hmm.
and it's
But
on
it'll
the
be a
cash
headline.
flow
It'll
basis.
affect
So
the
there's
headline number, though. Yeah.
well, it will, but I think it might even diminish it. So like let's say Tesla hit our number of like $1.32, but then on top of that, there was like $1 billion of, this deferred tax asset recognition or something like that. So then it got to like $1.70 or something like that. That would,
Hmm.
to me, kind of like take a lot of the steam out of the beat, because it would be like, oh, Tesla beats on earnings, but it's mostly related to deferred tax asset, and it's
Yeah.
like,
Yeah.
well, if they just post like $1.32 cleanly with like, no huge amount of credits and no huge amount of like deferred revenue or one-time items, I think
Yeah.
that's a much like it's harder to poke holes in that, and make the narrative, that, oh, Tesla's just, doing these gimmicky accounting tricks.
Yeah.
So
Yeah.
I'd almost prefer that they don't have anything weird like that.
Yeah. One thing real quick back on the regulatory credit stuff that's unknown. I remember back in like 2013, 2014, 2015 when the regulatory credits were much more important to Tesla survival back then. And so on like the Tesla Motor Club's forums, there'd be lots of deep analysis on it. You get some people that were like real specialists giving their analysis on it and stuff. And I think we determined collectively that there were certain quarters where the demand for them were extra high because the other car manufacturers were not producing enough compliance cars and they had to catch up
Mhm.
to meet the requirements that they had to meet in order to not be to be able to continue selling cars in California or whatever it was. And so those particular quarters, to meet those like deadlines, they would have to buy up a bunch more credits from Tesla. And so Tesla would have certain quarters where it wasn't consistent for that reason, we determined. So I wonder what those
Mm.
quarters are now and if that still applies, and if this is that quarter or next quarter is that quarter, if that kind of strategy still applies to the other car manufacturers that are trying to get enough credits to meet their compliance requirements.
Yeah, I mean, I think that that does still generally apply. The math of this is really complicated, and frankly, it's not worth tracking in my point of view in that level of
Mhm.
detail. Um, but the whole Tesla Q thesis from back then was, oh well, I think it was by maybe it was 2021 or 2022. They had all these announcements of like, GM's going to have 30 new EV models, or whatever they said they would
Yeah.
have at the time. And
Yeah.
Volkswagen is going to have the ID3, and that's going to dominate. So the thinking was like all these companies are going to have enough kind of internal production of vehicles that meet the compliance requirements, such that they're not going to need to buy these credits anymore.
Mhm.
That has not happened. Those vehicles they're contributing toward those OEMs totals. So that is lessening the supply, or the demand, I should say, for the credits, to some degree, but it's not like there's zero demand for these anymore, like a lot of Tesla Q accounts were saying. So
Yeah.
how long these stick around, and at what price kind of remains to be seen. But I think we're just assuming roughly 350 million for the foreseeable future, 350 million
Yeah.
per quarter for the foreseeable future.
Yeah, we don't know which quarter is gonna be, 700 million, which one's gonna be maybe 200 million, or I don't know, just hard to say. So we're just kinda averaging it to that for now, conservatively. Um,
Yeah.
and then, I guess what are you looking to hear in the earnings call? I mean, Elon confirmed he's gonna be on the call. That's good. Well, it's good because I always like
Good
to
or
hear him
bad, I
talk
don't
about it.
know.
It's good or bad. Whenever he's on the call, he messes things, or he chooses to be on the call when quarters are tough and Wall Street interprets it roughly versus when he chooses not to be in
Yeah.
the call, he knows it's a piece of cake for Zach and Drew to
We
answer
could end up
questions.
with like 15 minutes of nuclear war talk, which I don't think will be particularly helpful for the
Yeah.
stock. So I think
Yeah.
for like some people would be like, we might feel a little more comfortable if it was just Zach and team on there. But
Yeah. Yeah.
yeah, no,
What if he goes on, he's like, "We've made a change of name with, we're gonna change our company name to Skynet." And they're like and they're like, "We're gonna focus on the bot, and our company future is gonna be called Skynet." Like, that seems
yeah,
like
and
the direction
we're
we're headed
going
almost.
to overthrow the gerontocracy
Yeah. Yeah. With ageless computers.
with
So
ageless computers. And if you're an able-bodied 30-year-old, you can fight the bots, but if you're feeble and 80 and still in power, you will be overthrown.
yeah, by the ageless AIs. Yeah. So, what are you looking to hear on the call tomorrow? Anything you're particularly kind of there's a say.com questions. I went through those. Did you go through those yet? The top like several ones. I went through them. There's some good ones. I'm surprised that with all the discussion about share buybacks, I'm surprised that wasn't voted higher to one of the top like 3 or 5 questions. When I saw it last night, it was like number 10, or I don't know if I don't even get addressed officially then. But did you have a chance to look at any of those questions, or what are you looking to hear being asked? I'm curious.
So I forgot about those. So no, I haven't gone in and looked at them yet. I'll take a look after this call.
Yeah.
I think what I'm curious about. I mean, I think there's kind of two things that I would really like to get some guidance on. One would be kind of Q4 deliveries. There's been a little bit of, I would say, some kind of Tesla Twitter back and forth debate around the Troy Tesla like numbers. He's expecting only 400,000 deliveries in Q4,
Hmm.
essentially related to a lot of cars being left in inventory, left in transit at the end of the quarter.
Hmm.
I think that's kind of an unrealistically low delivery number. I know we're ending the wave and all that sort of thing, but a lot of people think, oh, the sky is falling with demand and that sort of thing, or just that this wave is going to result in much lower deliveries than people are expecting. And so if we could get some sort of guidance on like the delivery wave and why they're doing it and the cost savings that they're seeing from it, and kind of if they hit any sort of indication on what they're targeting for Q4, I think that would be really helpful. The other thing I would love to really hear them dive deep into is the Inflation Reduction Act. So this is something that, I think we were all over like a month ago about all the kind of goodies that were in there for Tesla in terms of like tax credits for their energy business, the both stationary storage and solar, as well as the tax credit for their vehicles. Obviously, this is only kind of U.S. centric, so it doesn't impact the entire business. But the dollar values that we're talking about are so big, and I really think, especially with the stock price fall that we've had over the last month, I don't think Wall Street really understands at all the potential impact to Tesla. So if they could kind of give an overview of that, I think that could really be a potential boon for the stock if they were to go over some of the opportunities that's creating.
Yeah, absolutely. And yeah, the Troy Tesla like 400,000. I mean, he's really sticking his neck out on that one, far from the pack of everyone else. And but he's got a lot of information and he's got his viewpoint. And I'm glad he's going with what his analysis that he believes shows, and he's putting that out there now, even though he knows it's far away it's just unpopular and far away from what everyone else is suggesting. So if it turns out to be Troy is right, I'm skeptical. I don't fully trust that right now. Like, to be my intuition and everything I know says it's 450 plus for Q4, maybe 440 plus. But if it's closer to 400,000 or possibly below or whatever, then I'm going to have to give Troy props and be like, he's
Yeah,
very
for
high
sure.
signal versus noise, and I should just be listening to him going forward, even if it goes against my intuition. So it is a big, a big point for Troy, a big time for Troy to put that out there right now. So we'll see what happens. He's got a lot of it. Arguably, he's got the most analysis of anyone tracking this. It's just a matter of how he's interpreting it, or conclusions, inferences he's drawing from all his analysis, and how he's compiling and putting together. Is he accurate or not in that estimate? He's not pulling that out of thin air. He's got reasons for putting that out there. So we'll find out in time. Maybe we'll get
Yeah,
an
yeah,
inkling to it on the
definitely.
call tomorrow. Yeah.
But I certainly appreciate that. Like you said, he's willing to stick his neck out there. And, I mean, I think there's a real threat that, you can all have, kind of, what's that fallacy where you just bunch together because all people
Yeah.
like, sorry, my brain's a little slow today, but,
Yeah. We all
you
sort
don't
of
want to
just
just like consensus bias or whatever
hysteria
it's
or
called.
whatever. Yeah. 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 There's biases. Yeah. But we're all kind of crowd just feeding each other's bias on
Yeah.
it. Tunnel vision.
Yeah, so you definitely don't want that, and I appreciate that he is willing to kind of stick his neck out in that regard. But to me, when I'm trying to like, okay, maybe he does have a point here, but when I start thinking through the logic group think that Mike says, thank
Yeah.
you
I
guys,
see. In
a
Nick's corner.
little too
Thanks,
slow
guys.
today.
Yeah. Yeah.
um, but yeah, no, it's helpful, but I just don't really agree with the conclusion. So we'll see. It's helpful to as you get these sorts of projections, just see as the actuals come in, and then you can kind of if you use that to then improve your own forecasting methodology, you should get more and more accurate over time.
Hmm.
And that's something we try to do here at Good Soil too. Is so whether we're high or low on something, incorporate that feedback into our models and into our
Yeah.
kind of thinking. Try to get closer to the truth.
Yeah.
I'm curious for you, Emmett, though, anything that you're looking for in particular on this call that would be something either you're curious to know or you think would be particularly helpful for the stock or for the investment thesis?
Well, number one, what's going on in China, right? Put those
Mhm.
demand rumors to rest, or whatever it is. If there is demand pockets that are, acknowledge it and see how he talks about it. I saw Farzad put a funny comment earlier where, like, Elon might lead the call talking about, if we're not here, there's no demand to worry about, we have an existential threat with World War III nukes going on. Like he might lead off with like a soliloquy of 10 minutes talking about World War III or something. Who knows?
I
But
know. Yeah, you could just hear his voice be like, "Well, if the world ends in December, then we won't sell any cars in Q1." Like you could
yeah.
totally see him just doing that. I'm like, "No, don't, Elon, please."
Like he might not intentionally set out to do that, but he might like creep into his, he's got no filter. And I love that he has no filter. And these are things I worry about too, to be honest. Like all these tweets of like nuclear threats, and we're talking about Tesla earnings tomorrow. Part of me is like, why do we even care about Tesla when the world's about to blow up? So Elon probably has that mindset too a lot of times. And so if it comes out tomorrow, it'll be a big downer for the stock probably. But what I'm looking to hear is, what's the demand and order backlog stuff like? And, though there is a global recession going on, and so that's lowering demand. But is Tesla, are they seeing, um, what levers are they planning to pull if demand gets lower? The other big thing I'm really looking to hear about is anything about the Cybertruck. They announced that semis are coming, but there was that suspicious picture that leaked on social media and Twitter the other day of like the two Cybertrucks under wraps, and Elon even acknowledged it, like, "Oh, you can't hide these" or something. I don't know, but I'm not sure if that's a breadcrumb that like more to come on the Cybertruck. And it would almost make sense if he sees a global recession coming into next year where demand is softer, that maybe he's going to accelerate the production of Cybertruck, versus what he thought before. So it's almost possible that maybe he'll say something like, "Yeah, we're planning to start deliveries in Q1 or something, initial deliveries, and ramp up as the year goes on." It'd be really crazy if that happens, and that's, I think, a plan they could do, if they do see, a global recession impacting demand for the next 12 to 18 months, for example. They could just ramp up supply of the Cybertruck because there's plenty of people that want that.
Yeah, I don't know if they could do that. I mean, I think that Idra press that was just in the news, that
Yeah, the
new
one for the
Giga press, I think
Cybertruck.
that was for the Cybertruck. So I'm actually kind
Yeah.
of surprised that that's ready already. But in talking to a couple of people in the supply chain, to me, they were thinking middle of next year was very hard to meet anyway.
Mm.
So of course that's just anecdotal and could be wrong, but I'd be surprised if there was anything more than like, I don't know, a dozen Cybertruck deliveries in Q1. I mean, maybe they've already made like at least half a dozen of them, it seems like, just from the pictures we've seen. So they're probably like hand building those, and they're like, prototypes of some sort. So maybe they
Yeah.
deliver some small amount of them off of like a pilot line or something like that. But to me,
Yeah.
I wouldn't expect it to be kind of meaningful until like late Q2 at the earliest. But I'd be happy to be wrong on that. They've surprised us
Yeah.
before. Like Model Y was remarkably quick.
Yeah, yeah, and the original, I think the Model X was notoriously late, but the Model S, that came like on time or like a month ahead of. So every once in a while, there's like a new model that is on time or even ahead of schedule slightly. But the Cybertruck, yeah, I mean they've been building these prototypes for like years, and
Yeah,
you got to think they've been planning for when they want to turn I think they were delaying until they could have started their Cybertruck production by now. I think that was the original intention, but the demand for Model Y was so high. Remember, he said like, "There's no reason for
yeah.
us to introduce new models when we don't have enough to meet demand for Model Y for so long." And that was like a year ago, exactly, almost, when he was talking about that, or maybe 9 months ago before, and but now, recognizing that maybe demand for Model Y is not as endless as they thought with the global recession, maybe they recognized that a few months back, and they've already started making plans to like figure out how to get the supply going of Cybertruck 3 or 6 months earlier than priorly they planned or something. That's one guess. I'm looking for any kind of ways to read between the lines on that. I mean,
Yeah.
I don't know
Wh-
but
What
yeah.
what do you think about semi? I mean, that's actually going to hit this quarter. We're going to have some actual sales of semi in Q4. Do you think we'll
Yeah.
get any guidance on like targeted volumes for that, like in Q1 and beyond, on this call?
Yeah.
Or and if not, like what's your expectation? I mean, that's a hard one to forecast. It seems like to me.
Yeah, it's so hard to forecast. I think the semis, like, I'm thinking these big giant trucks, like, they're going to deliver like a few hundred per quarter at the most, is like what I'm thinking anytime in the foreseeable future. So I don't think it's
Hmm.
going to move the needle on earnings. It's kind of exciting because you really see semis, but maybe in like 5 years when there's more mass adoption of the superchargers they need and all that, then they'll be producing thousands, maybe 10,000 a quarter or something. I don't know, not even like hundreds of thousands. I don't think ever. I could be wrong, but to me, like the semi is great for the getting less carbon emissions out there, and it's great. Maybe they can sell them at a higher premium as time goes on to get even more margins because first they have to prove, I think, the business model a little bit with these first orders to
Yeah.
PepsiCo and others that like, hey, this thing is legit. It's going to save you, $100,000 per year in fuel and dry, whatever. So I think once they kind of prove the business model for a year or two, they can maybe raise the prices and make it more autonomous, for example. So this is a good start. I just don't know if it's going to have any near-term impact to the fundamentals of Tesla. What do you think?
Yeah, they're definitely going to be small volumes at first, but it does seem crazy to me. I mean, like, look, running the numbers on the upfront cost plus like the fuel savings, and maintenance savings. It's
Yeah.
wild how like the internal rate of return that a PepsiCo should have on these if they perform as advertised.
Yeah.
So like I wouldn't be surprised if like we get 6 months or so of initial performance and then like the price doubles or goes up by 100,000 or something like that
Yeah.
on these, because it doesn't make sense for Tesla to give all that cash flow upside to the like to the customers. So I don't know. I'm curious to see how this unfolds because I think this could be really, really impactful down the road. There's a guy actually we're going to have on the channel in, I think it's a week or two. We're doing a Tesla Energy Roundtable, and Mad Manx is his name. He did a great tweet thread about a month ago about Tesla semi potential, and it's like wild, the margins when you start thinking about it. So I'm really excited for this. I know Fresh Jiva also, Mayor Thaker it's like he views it as one of the most important products in Tesla's whole portfolio. But I think it's just been
Mm.
delayed for so long that like we kind of tend to think that it's not that big of a deal. But it wouldn't surprise me if we get to this point next year and it's like, oh, like Model Y is nice, but Cybertruck and Semi are really where all the margins are made. So
Yeah.
I don't know.
Yeah.
I'm just so optimistic when I start thinking about like what does 2024 look like, and even
Yeah.
2023
Well,
is going to be wild.
I wonder how many semi trucks there are. And if anyone in the comments knows, I wonder how many there actually are. So, like, what's the total amount of semi trucks in the United States, for example? And that's how many they could at most replace. Actually, they could replace more than the current amount of semi trucks. They could probably produce a lot and sell a lot more because they could completely make rail service obsolete with the semi trucks if they become autonomous and they're so cost effective. There could be like double or triple the amount of semi trucks on the road driving autonomously, much more cost effective than transporting by rail. Lots of stuff.
Yeah, so far as that says 15.5 million trucks in the US. So I think the
Mm.
like if you do some rough math and assume that they're turned over like every 10 years, that would assume that there's like 1.5 million sold each year, something like that. So, but yeah, about
Mm.
2 million, as far as that says, sold per year.
Wow,
So,
that's a lot more
that
than
gives
I
you an
thought.
idea of the market. And so, like, if Tesla gets, even just 10% of that, which if the specs are as good as they say, like, it should be a lot higher than 10%.
Yeah, that's more than I thought.
So
It could be a big deal. Like maybe Elon gets on the call tomorrow. He's like, "Yeah, we're really ramping up semi. We plan to produce, tens of thousands by middle of next year per quarter or something." I don't know if he says something
yeah,
like that. That would be exciting.
charging is a serious constraint though, because it's like you
Yeah.
need something a lot higher than a V3 supercharger. I think I was like doing the math, and it's like you actually need it might be like a megawatt draw, something like that, in order to
Hmm.
turn the vehicle around. And so like you need like step up transformers and a lot of like highly
Yeah.
capital intensive stuff. So but then that's when you like, if you tie it back into the IRA, and we'll get into this in our energy roundtable that we post in a couple weeks here. But then if you imagine the original vision for all these supercharger stations is that they'd be like solar based, with big battery backup. And so then if you get solar tax credits for the solar on these superchargers, plus tax credits for the battery, plus like highly margin positive business on just like your selling your semis. It's like the potential for them to both undercut utilities and make a huge margin on your energy that you're selling at these supercharger stations, and make big margin on the semis. It's like, it's wild. But you have to actually go through the math to understand what a huge opportunity this is. So
Mhm.
I'm really excited about that, but it's going to take years probably for them to build out all that infrastructure.
Yeah, yeah, absolutely. So we'll go into Q&A second, but real quick, we had a really cool interview with Daniel Schreiber, the CEO of Lemonade, on our YouTube channel. Anyone wants to go to our channel, they can watch it. It kind of lays out a lot of the bullish case, obviously, for being an investor in Lemonade. That we're both going to the Investor Day actually in November. That's exciting. We're going to go to the Investor Day and meet Daniel Schreiber in person and Shai Winiger and stuff and other investors that show up. So that'll be cool in New York City. But I mean, I'm excited about Lemonade, and also Roblox had great metrics. On the 15th of every month going forward, they are reporting the metrics from the previous months, like usage, like daily active users, hours, total hours spent, bookings estimate, and so forth. And it was viewed very favorably by Wall Street, and that's why the stock was up 20% yesterday. When all the rest of the growth tech stocks were still up 5 to 10%, but Roblox was up a lot more because they had such favorable metrics reported. So I'm excited about both stocks. To be honest, those are two other stocks that are much smaller, a much smaller part of our portfolio than Tesla, obviously. But two names we follow, and we're excited about the future of. Um, so Matt, what did you think about the Lemonade interview and the Roblox numbers? I guess.
Yeah, so yeah, Lemonade. I mean, there wasn't a whole lot of new detail. I mean, we couldn't obviously. They're in the quarter has ended, so we couldn't ask any financial information or anything like that.
Hmm.
But if anyone wants to know kind of like what's the high level investment thesis, I think that's a great interview to kind of start and
Hmm.
the kind of trends that they're seeing in terms of in-force premium outstanding as well as like the customer acquisitions. It's really setting up for what could be like a huge exponential increase in revenue with like very stable operating expenses, which was kind of like the Tesla recipe for success. Was just like huge operating leverage. So I
Hmm.
think Lemonade is really set up for the same sort of dynamic. It just so happens that they're like, right about at the peak of like cash burn and negative profitability right now. So it's like very easy to kind of, like crap all over their business model and say they burn cash and they're not going to make it. And I
Hmm.
completely understand that, that philosophy or that mindset, but I think it's going to change in relatively short order. So yeah, I'm very optimistic about that. And then yeah, the Roblox numbers, they were really surprising. I think Roblox was up like 25% yesterday, something like that. So
Yeah,
really
20%.
kind of
Yeah.
yeah, 20%. Um, so like Roblox posted some really strong numbers, and the thing that is interesting is they've got a decent amount of overseas revenue, and they had a note in their report that said if they like had if the dollar had not strengthened to the extent that it had, their bookings would have been 17 to 21% growth year over year.
Yeah.
So once you start adjusting for those things that are not core to the operations of the business, it starts looking even better. So yeah, I think both companies have a really bright future.
Yeah. Yeah. Roblox, you cut out a little bit on spaces, I think, but hopefully YouTube, everything sounds fine. But I can still hear you. It just was choppy. So with Roblox, I'm excited going forward because there was the hangover after the COVID accelerate. COVID moved Roblox's future forward by 5 years pretty quickly in 1 year, I would say. But then after
Mhm.
COVID lockdowns ended, and everyone got back to normal, there's a natural hangover of the usage of Roblox, of course, right? And so everything's sort of gotten back to normal like 12 to 15 months ago, I would say something around that range for the most part in terms of COVID lockdowns. So for the last 12 months or 15 months, it had looked like Roblox's numbers, maybe the last 10 months, I don't know, whatever, it had looked like Roblox's numbers were not that impressive anymore. And so
Yeah.
now we're at the point, at the month by month point where we can actually compare Roblox's growth to a natural growth from the previous year without COVID lockdown being influencing how much people used it a year ago. So I feel like the next few months of Roblox numbers are going to be exciting and telltale of whether Roblox, I keep saying, is it a fad or a trend? If it's the trend, it's incredible stock to be in for the future, I think. There's all these new things. It reminds me of Facebook a little bit, like a year after Facebook's IPO when the stock really took a hit and no one kind of recognized what Facebook could do to monetize and so forth. Then Facebook took off as soon as it started like monetizing the right way, and people saw that Facebook's here to stay. It's not a fad; it's a trend. So, and I mean, Facebook today is not great to invest in. Maybe it is, maybe it is not. I'm so far removed from Facebook at this, or Meta at this point. But back then, I was looking at it very closely and invested in it, and it did really well for a couple of years there. So I feel like there could be something similar with Roblox going on here, and I guess we'll find out in the next few quarters how impressive or what people think about Roblox, what investors think about Roblox. Is it really the only game in town that you can invest in the metaverse? Pure play. There's Epic Games, of course, but that's not publicly traded. It's not quite the same as Roblox either. So I'm just excited to see the story, how it plays out from here for Roblox. The financials are much more difficult to predict, I think, for Roblox, but the financials, I believe, will be there if the story, goes the way I think it could. So if that makes sense, it's not a great
Yeah.
conviction idea, but Matt's here to help keep an eye on the financials and put down some reality markers on things, or hopefully. But it's something we talk about, and we both are trying to understand what the future could lay for Roblox. So enough on the Roblox thinking. Anyway, let's go to the Q&A. Most people follow us for Tesla, and that's what we're most knowledgeable on, obviously. But we do like Roblox and Lemonade and Rocket Lab as well, and we study those companies too. So people can always ask us questions about them as well. So we'll go to Q&A. Alec will post some questions. We'll go for like 15 minutes here. So Nick Vladis on Twitter says, "What's your biggest mistake holding, trading Tesla stock and options, and what did you learn from it?" So personally, my biggest mistake was after the Cybertruck unveiling. I had a bunch of like 400 call options that were set to expire in January, like 2 months later or something. Or maybe this was like, yeah, it was after the Cybertruck unveiling, because I think that's when the stock started creeping up, or maybe it was a year later. I can't remember which year, but it was the year before Tesla really broke out, and so I had a bunch of uh, you know call options of Tesla that were expiring, and Tesla was like $200 or $250, and I just closed them out for like 10 cents or 50 cents each because I wanted to recognize the tax losses against some gains that I had earlier in the year instead of holding on to them to the end of December, because I thought if I waited till December, then the call, I've seen these call options have like a zero bid by like 10% offer, and you can't close them out. You can't sell them because there's no one bidding for it, so I couldn't recognize the tax losses for that calendar year if I waited longer. So I did that, trying to get cute with my taxes. And then sure enough, December, and it started rising, the stock, and it went up to like 400 plus by the end of December, I think. And then I was already like at the money or in the money. By January, I would have held it. And if I held it, it would have been, instead of 50 cents, I could have sold them for like $50, each at the expiry. So I really screwed myself on like hundreds of call options. Like literally, I had a lot. I was like banking a lot on that, and it was a little painful personally. Like just trying to get cute with tax, matching up my tax losses and gains. I guess that was a big mistake. Any thoughts about you,
I,
Matt?
I did the exact same thing actually, but during the COVID crash. So I had rolled over a bunch of options, a lot of options, and like I just kept seeing like my unrealized gains go down and down and down.
Mm-hmm.
And then when they finally turned negative, I was like, I'll just sell them and get the loss. Well, that turned out to be the exact day of the bottom of the COVID crash, and
Oh
so
my
if I
gosh.
had held them, it would have. I mean, I don't try to beat myself up too much because I'm doing well enough to have left my job and start this venture, or join this venture with you. But
Mm-hmm.
certainly trying to get a little too cute in timing of some things for tax reasons is not wise.
No, burns you. Yeah, start darn taxes. Yeah. So yeah, good question though. Yeah. Next question here from T. DeMole on Twitter. Do you think retail investors lending their shares to short sellers could have a material effect on stock price? That's a good question. I don't think I've been asked this before. And working at Interactive Brokers, this type of question came up a lot, and I talked to a lot of stock lending folks about it, and I don't think it has a material effect on the stock price, because if people want to short the stock, they're going to find the shares one way or another. They'll just pay a higher price for it. I mean, they'll pay a higher fee rate to borrow the shares from someone who's less willing. And then, some institution will lend it out at, 3% if retail investors don't lend it out at 1% or whatever the fee rate is, if the retail brokers don't. So I don't think there's much risk or any, in retail, unless it's a stock that's like held 100% by retail investors, but there's virtually no stocks like that. Then you'd have to have all the retail investors like band together and say, we make sure we have this fully paid for. We're not lending out. But if you own any of your shares on margin, you can't even control having your shares lent out or not by, there's a certain rule that any broker who's helping to finance your position, then they have the right to lend out your shares up to like 130% of the amount they're financing. So if you have, $100,000 of cash you put in an account, but you buy $150,000 of Tesla, or even $150,000 of other things, and maybe you have, 70,000, maybe half of it's Tesla, $75,000 Tesla. Well, the broker that's lending you $50,000 for your margin balance has the right to lend out up to $65,000 worth of your stock for their own benefit, and they collect the fees themselves on that. So, it's so I think a lot of retail investors might not even understand that, to be honest. So I wouldn't worry about it if you have the option to lend out your stocks, and it seems like a pretty low risk thing, at least if you're doing it with Interactive Brokers. I ran through that risk model and black swan events and in lots of ways, but I'm not sure all the brokers are as safe as Interactive Brokers in the case of a black swan event. But I think there's certain regulations they have to follow, so it should be pretty safe. But I just don't know.
Yeah. The other thing I'd say is like short interest is very low right now relative to where it was like in 2020, which I think absolutely contributed to like the meteoric rise, because you
Yeah.
had a lot of short covering and gamma squeeze, and it was like a perfect storm. And that
Yeah.
the dynamics are different now. So
Yeah.
we still certainly believe Tesla's undervalued, but and not financial advice, but it really isn't the same setup as we've had before. And I
Yeah.
see in the comments, Boil Down H wants to know what I'm drinking. It's a Nixie Lime Ginger Sparkling Water. Highly recommend it.
Nice. But you know what? It's funny. Lemonade, I'm looking at the Interactive Brokers platform, is highly shorted. 100% of the shares you own of Lemonade, if you participate in their stock lending program, is getting lent out to short sellers. And the fee rate is not as high as it's been in the past. In the past, it was like 20%. Like that's the amount of extra revenue you're going to earn on your Lemonade shares, something like that. But now it's like 2.1%, which is still above like the zero or close to zero other things are. But it, 100% of your share, like Lemonade, if there's any stock we cover that has a chance of a short squeeze at some point, it's
Yeah.
definitely Lemonade. Yeah.
Yep.
Next question from Martin Muldoon. Do you expect they will announce a stock buyback tomorrow? I mean, Elon said noted on that comment by Leo Kogwan, but also Leo Kogwan's like number like 3 shareholder in all of Tesla. And he's so Elon is rightfully should be acknowledging some of Leo's tweets about stuff, from time to time,
Yeah.
just because he's like owns like 5% of Tesla or something. So I don't know. What do you think? Do you think they're going to, I don't know if it means like noted, like they're going to do something about it, or just noted like, yeah, I acknowledge your request or whatever. And something we've talked about, or we do talk about. I don't know. What do you think of that?
So I don't think it would be like a formal announcement tomorrow, but I could see them opening the door and saying, we see somebody posted a thing about when they initially entered into the Bitcoin position, about how Zach Kirkhorn at the time said they were looking for a way to essentially get some sort of yield on their cash holdings, in a way that was still liquid. So to me, doing a share buyback actually kind of helps that. I think with inflation being so high right now, that there's more of an argument to be made that you really need to kind of reinvest that cash to at least get some amount of interest return. And there's probably, well, from their point of view, with Tesla trading where it is, it'd be a very high IRR potential if they think that the company is undervalued, which I think they probably do. So I could see them opening the door and saying, we're going to go to the board with some sort of proposal or something like that. But I don't think it would be as specific as we're authorizing a $5 billion buyback that's going to be, consummated by the end of December or anything like that. I don't think it'd be quite that specific, but I do hope they at least
Yeah.
address it.
Yeah. I think that he should probably comment about it, even if they don't do it. I would think they'll say something about it, like, yeah, we're still thinking about it in the future. We'll plan to do it soon or whatever. Next question from Boiled Down AH. Question: Isn't the most important near-term driver of the Tesla share price Elon finishing the Twitter acquisition? I feel the underperformance of late is all front-running Elon needing to sell more. There is an argument to be made there that there's a lot of that front-running that's going on with the Twitter acquisition, and that when he completes the Twitter deal, a lot of the merger arb funds will unwind their Twitter Tesla pair trade, and meaning they'll buy back Tesla shares and get
Hmm.
cash back for their Twitter that they bought in its
That they
place.
bought.
So
Hmm.
there's a big argument there to be made that it could result in Tesla appreciating very significantly if that happens, and that would show, if it did happen, that means like a lot of the drawdown in Tesla stock price in the recent months or whatever month or so has been because of those merger arbs entering into that pairs trade where they're shorting Tesla and buying Twitter.
Yeah, I mean, it does seem like that could be what's driving it. I mean, the S&P is down 4% in the last month. Tesla's down 27% in the last month.
Mm,
Now, granted, there was the big deliveries from expectations, but to me, it never made sense that that those 20,000 deliveries should equate to like a 27% share price hit. So
yeah,
um, to me, it would make some sense that there is that kind of arb fund doing that pair trade that you talked about, and if that does unwind, then it could be a pretty meaningful rise also, but
yeah. Now the
not
question
investment advice.
Yeah, yeah. The question is, who's front running that front run, right? Who's front running that unwinding of the front run, right? So is there some arb trades getting in front of that? Like, maybe we should be doing that. I don't know. If that's really going to happen, then there's an opportunity to front run that by buying a whole bunch of Tesla now, and maybe that's already been happening too. And so when they unwind it, we won't see a whole lot of material effect on the actual stock price. We'll find out. Yeah, we'll see. So good question. From Carl Branco on YouTube comments, great interview with Schreiber. That's from the Lemonade CEO. I get the value prop now, but what's stopping legacy insurance from doing the same? Legacy Auto is reducing their dependency on dealers for sales. Why not legacy insurance? That's a great question. Matt, you want to take a first stab at
Yeah.
it?
So it's funny because if you look at the way that legacy insurers are trying to do some of this stuff, they're just outsourcing it. So like one of the really unique things about Lemonade is they built the entire software backbone infrastructure from scratch, and so a lot like Tesla does, where they like vertically integrate with the software driving things like at the plant level and all the way through to the cars, and then like feeding that data back to the training center so that the AI team can work on it, the autopilot team can work on it. Lemonade's doing something very similar, where like from the sales process to processing claims to updating the AI for improved pricing going forward, and like loss estimates and that sort of thing. Like all of that it was like built in house. So some legacy insurers are like outsourcing a piece of that, but you can't just like outsource a piece of that and then stitch that back into your existing business in the way that Lemonade is doing it. So they might be able to mimic some features or something like that, but they wouldn't be able to get the same level of like operating leverage that Tesla's able to get. And I also think just with like kind of all the stakeholders that they have, they're not going to like turn around and fire all of their agents or like get rid of that part of the business. And if you look at like the agent cost as a percentage of like total in-force premium that the customer pays is really meaningful. So there is pretty substantial cost saving opportunity that would be available to Lemonade that would not be available to other insurers unless they just like take a chainsaw to their whole business model and say, you know what, Lemonade's got a better way to do it, so let's just do that. I think if any CEO actually did want to do that, the right thing to do would just be to buy Lemonade.
Yeah.
Um,
And maybe they've tried. That was one of the questions we were thinking about asking Daniel, but we knew he probably couldn't comment on it, and we thought maybe we'd just try to read his reaction to see if we could read between the lines. Has any insurance provider tried to buy you, acquire you guys? He probably couldn't answer even if they were. So I think that I wouldn't be surprised if they've tried, and him and Shy just have this vision. They're like, no, we don't want to. We want to just keep moving forward with our vision, and so. Um, yeah, I agree that, with everything you said, Matt. And the thing about the legacy auto reducing their dependency on dealers for sales, yeah, they want to reduce their dependency on dealers. I don't see that happening, though. I don't see them actually reducing dependency on dealers in the US, at least for sales. I don't see that. I don't see any US car legacy manufacturers selling direct to customers. I don't think they can. It's not part of their business model. It would ruin their whole business if they tried to do that, I think, in lots of different ways. And so I think insurance, same thing with agents and brokers, insurance brokers they work with, insurance agents they work with, they can't cannibalize that business. And those insurance brokers and agents will just leave them and go. So, it's just that's one symptom that I think cannot be overcome with the legacy insurance providers and legacy automakers in the US. So that you have that in the favor of insurance. That's one thing that, is not going to be able to be on par with Lemonade with legacy insurance.
Yeah, and I see in the comments, somebody says the root insurance does the same thing. And like that's true, but to Daniel's point, like they only have one product offering. So like Emmett, how many, like at least for me, I've got auto, home, life insurance, and then health. Well, that's a separate provider. And there's a huge benefit to being able to bundle those together.
Mhm.
And so like while other companies, other startup, insurtech plays are, doing something similar, in my mind, they don't have nearly the same bundling and like the multiplicative effect of the in-force premium really growing over time as customers go from like renter's insurance, which is really low dollar value, to like home and auto and life, and like going from spending $50 a month to like $300 a month or something like that. So
Mhm.
it's a huge, huge deal, I think, to be able to have the whole breadth of product offerings.
Yeah. And how many customers does Root have right now? I mean, it's possible Root succeeds too, and Lemonade. Like could be the whole new breed of insurance. I mean, that's one thing Daniel Schreiber mentioned in the interview is that, there's room for multiple new insure tech providers to succeed. It doesn't have to be only Lemonade, and he roots for them. I don't think he said the word roots, but he wants them to succeed, and I'm sure Root Insurance is one of them that he would like to succeed as well. So maybe they do succeed too. I don't know. We haven't studied Root's business model enough. They're tiny micro cap stock. Maybe we should look at them. 100 million market cap. I don't know what their financials look like. I think we looked at them briefly once, and we are like, I'm not sure the financials look good. But maybe it's worth looking at that company too. Who knows? They're highly shorted as well. But you got to find out like how far along are they in the process of getting customer. Lemonade has like almost 2 million customers, I think now. And, not that many car insurance yet. They're starting to get the car insurance revved up, but Root is only doing car insurance. And how many customers do they have? Like a few tens of thousand, maybe? I don't know. Like they're probably very early. And so there's a lot to prove, but high risk, high reward, possibly, right? So I don't know about
Yeah.
Root, to be honest.
So he's
Yeah.
saying that Doggy's saying in the comment that they offer home, auto, and rental, which that's interesting because I think Daniel was saying that that Lemonade was the only one offering all those. So maybe we have to brush that off and get to the bottom of that discrepancy.
Yeah, I'm at the Root Insurance website. It says good for drivers. So they're only marketing on their website car insurance, but maybe there's somewhere else they do other things. Yeah. So I don't know. It's a tiny company, but maybe they have dreams to be similar to Lemonade, I would think it seems like at this point. So maybe they could be, and they could both succeed. It's possible. Um, we'll do one more question here. All right, let's do one last question here. It's from Farzad. How you doing, Farzad? Question: if energy doesn't show a clear sign of big ramping in Q3 and Q4, will you be disappointed? It seems like there's no better time than now for it to dramatically increase. I'll give one quick point of my intuition, and I'll let you run with this. This is your specialty. My thought is energy is for when they have a excess supply of batteries. Then they're going to put that excess supply of batteries into energy products after they can sell as many cars and build and sell as many cars as they can first. And so it seems like they're at that kind of inflection point, either because they're production constrained or maybe demand constrained on the car side more than production constrained. Well, maybe we can read the tea leaves on the earnings call and find out if that's the case, on tomorrow's earnings call. But Yeah, I would think that it seems like they have enough batteries, so I would think I would be a little disappointed if energy wasn't ramping up significantly in Q4 at least, if not already in Q3. That would be my initial thought. But because Martin did say, or I can't remember if it was the investor meeting or Martin said somewhere that um, they have this is the first time in years they've had more than enough batteries or adequate battery supply or something. So that's what I read, that they can get all the batteries they need right now.
Yeah, Martin did say that. I don't remember exactly where, but they're building this dedicated 40 gigawatt hour mega pack factory, and presumably that's going to start to have a pretty meaningful impact. And like Q2, we saw a pretty sizable increase in deployments and more importantly margin. They had like 11% gross margin last quarter, which I was not expecting. So you could imagine if they're kind of building on what they've done in Q2, it could be pretty close to the point where maybe you've got like 150 $200 million of gross margin pretty soon. And if you've got that for 3-4 quarters in a row, all of a sudden analysts have to start actually forecasting Tesla energy in their earnings and their margin calculations. And so that would be pretty impactful, I think, if it got to the point where they're saying, hey, look, we've got this dedicated revenue stream, we've got this 2-year backlog or 3-year backlog of projects right now, and we finally have the supply to meet them, so we should be able to do so at better margins and at much higher like top line growth levels. So it's funny because I've been like expecting the energy increase forever. It's never materialized. So I was just like, all right, forget about it. Like auto's good enough and they'll figure out energy eventually. But to Farzad's point, it does seem like now all the cards are actually, kind of stacked the right way where they can actually start to, see some meaningful growth and margin from this side of the business. And that's really exciting, especially with the Inflation Reduction Act and all the things that that's going to do to give them even greater pricing power. So I'm pretty excited about where that part of the business goes.
Yeah. Good. Good. Yeah. And one thing about Root, I was just on their website fiddling around. Seems like you have to talk to an agent. I checked California, it says licensed Root agents aren't available in California yet. So it seems like they're using agents and they're not automating everything. And I think it sounds to me like Root Insurance, maybe they're building on top of a legacy backbone infrastructure. It's almost like, the way I describe Lemonade in the fintech world is like you put Robinhood and Interactive Brokers together. You have the backbone clearing, connection to exchanges, short selling, portfolio margin infrastructure built by organically from the ground up by Interactive Brokers. But then you have like the interface of an elegant Robinhood on top of it. And that's how I think of Lemonade. It sounds like Root Insurance might be another like Robinhood or Webull or some other, fintech company that has a nice front end, but is really just built on top of some other legacy like Pershing or Bank of New York or someone like that, back end, which is like really a legacy provider. There's a lot of these insure techs out there popping up. A lot of them are not publicly traded, so I don't know all of them, but it sounds like Root is maybe one of them that is publicly traded. So just be careful of Root Insurance. I would say we haven't looked at it. Just I know we talked about it a lot, but just be careful of it, I would say. Anyway.
Yeah. So we maybe one last parting note. I know you're not going to be able to join Emmet, but we've got this mega stream that Farzad is hosting. I don't know how you pulled this together, Farzad. He's been harassing me in the comments. He's saying Michigan State sucks. Farzad, your team lost this weekend. Get over it. But we've got Ross Gerber, we got Gary Black, we got Farzad. I'm going to be there. Tesla Boomer Mama, Nicholas Gibbs. I think there might be one or two others. It's going to be a great mega stream. I'm gonna have to do my best to keep my mouth shut because there's gonna be so many just great people on there. But anyone who wants to watch the earnings stream, we'll be covering it, I think, starting at 3:45 Eastern, so right before market close. Yashu, that's right. How could I forget Yashu? And blueberries are not juju, Farzad, so
Yeah.
get over that. So yeah, we'll be covering that. I'm really looking forward to that. So catch that link and tune in if you can.
Yeah, I'm excited to tune in and out of that. I'll be doing some other things, but I'll definitely be listening on and off throughout the few hours you guys are on there. So maybe I'll drop in later on after the earnings call if I'm available. Who knows? But definitely looking forward to hear that live stream kind of coordinated effort versus like 7 different live streamers doing 7 different things. You don't know who to listen to at which time, and different people cut off at different time. It can be it can be confusing sometimes now with so many, specialists in the Tesla area now. So,
Yeah.
all right, guys. Well, good chatting. We'll be here next Tuesday, and a big day tomorrow. Tesla earnings. We'll see if we'll see what happens. Yeah, see what happens with the stock and
Yep.
the macro market, and I'm sure there'll be lots to talk about next week.
On episode 69 next week. So
Yeah,
that'll be a good
69.
one.
Yeah, maybe 42 minutes in, we could do something special. Who knows?
All right.
All right.
We'll have to put our heads together. All right.
Yeah.
Thanks for watching.